40, yeah, the 0 by 42 was my take profit. Yeah, 42 by 0. It was like 88 3/4, 89 or something like that. Yeah, but little pop, something like that. Yeah, it is what it is, but that's okay. Good morning, trade pros, or good afternoon, trade pros, rather. We are live here from Toronto, Ontario headquarters on today's date, October. Excuse me. We are in October on the second October, second day of October 2019. Sorry, guys, I'm losing my speech here. And welcome. So we didn't do this webinar, or not the webinar. We didn't do the update yesterday. I had a little bit of technical difficulties with my data feed, but that's all been rectified, and we are back and kicking for today's update. Good morning, guys. George, Craig, anybody else that might be watching. There's 9 of you. Two have said hello, so thank you to the 2 that have come in and said hello. Let's go ahead and take a look at some of the drivers that came through during this update. Not this update, during the US session. Georgie covered some of the overnight drivers. A couple of big ones on the morning part of the session. Georgie covered the ADP non-farm employment change numbers. Those came in at 135 versus 140 expected. And on the US session, we had 2 major drivers, one more so for crude oil. That was the crude oil inventory report that gets reported each Wednesday at 10:30 a.m. And at 10:50 a.m., we also had FOMC member Williams speak, and he participated in a moderated discussion at the University of California, San Diego Economic Roundtable in California. All right, so Williams is a FOMC voting member. All right, so he is a voting member, so whatever he said should be a little bit more important than your non-voting members. All right, guys, so as far as what's left on the agenda, I'm not really seeing anything on here for the remainder of today's session. That's basically all that we had for the US. Our next real economic release is tomorrow morning, the ISM non-manufacturing PI, but we do have some Fed speak overnight at 2:45 a.m. and that is FOMC member Evans, who is also a voting member, Evans will be speaking about monetary policy at Global Interdependent Center Central Banking Series in Madrid. All right, so that's what we got. Nothing else on the agenda. As far as the drivers throughout the US session, a couple of things happened. We did have September ADP, as mentioned, employment change 135 versus 140. As Georgie mentioned, the August numbers were revised lower. We did have the September ISM in New York figures released as well. That came in at 42.8 versus 50.3 prior. And this one, guys, was a 40-month low. That's right, you heard it, 40-month low. That's at least 3 years back. We've had a new low here, and this indicates contraction. All right, so that's what we've got on that front. WTO grants US the right to target 7.5 billion in euro EU imports with trade sanctions as a result of Airbus subsidies. So while the US-China trade war has kind of been taken center, we'll call it center court in this, there's also Trump has been pretty vocal with the EU. All right, with regards to the EU, it was, I believe, Airbus and Boeing, not sanctions, but some subsidies that Europe was providing to these companies, to Airbus, and Trump has been looking to target potential EU imports on the back of that. And we got that in the squawk today. The World Trade Organization grants the U.S. the right to target 7.5 billion in euro imports with trade sanctions as a result of Airbus subsidies. So this thing's flying a little bit under the radar because of the U.S.-China escalations. But that's something important to keep an eye on as well, because the US is one of the biggest trading partners with Europe as it relates to vehicles, to automotives. My apologies, I'm losing my tongue. As it relates to automotives. And so that would be a pretty big, um, pretty big deal if they put tariffs on these 7.5 billion. So that's another thing to look out for. Kind of unrelated, Senator Sanders was hospitalized Tuesday after experiencing chest pains at an event, cancels the event. So nothing really market worthy, but it's bolded in my report here. So that's what you guys get. All right, so that is basically what we have. We also had Feds Barkin, who is a non-voter and a hawk. All right, so non-voter, excuse me. So a non-voter simply means that they don't vote on any of the decisions. So what they say is generally not as important as your voting members. And the fact that he's a hawk, he's likely going to talk down any rate cuts, anything like that. He said, my posture is very balanced on rate outlook. Expect a lot of information before the next FOMC meeting. Surprise, surprise, not really much coming out of him. Even if he did say something, doesn't really matter because he is not a voter. So that's what we've got on the economic agenda. Let us switch over to the charts and get you guys some key levels for today's session. Let's see here. Hello, Mayank. Alan. Hello, Alan. Do you cover natural gas? Interested in your views for the inventory tomorrow. Alan, we don't really follow natural gas as heavily. We prefer crude oil, light sweet crude. All right, so we do crude oil. As far as the natural gas inventories, we don't really trade natural gas, so and it doesn't really have much of an impact on crude oil. So to answer your question, I wish I could say yes, we do look at natural gas, but in complete honesty and transparency, not something that we trade actively. Maybe once in a while there might be an opportunity, but there is generally better opportunity in crude oil, so we look at that. We tend to focus our attention more on that one. All right, I can pull up a longer term chart of natural gas near the end of this. I don't really have a natural gas template here on my actual trading screen. So if you do want that, you can click Y and we can take a look at natural gas near the end of this. But as for now, let's go ahead through the normal flow of this update, and then we can get into covering some of the assets you guys might be interested in towards the end of this. So if that's something that you guys want me to take a look at, go ahead and type your symbols or your commodities in there. And if I don't have a template already up for it, then I'll just go on TradingView and we can do some quick analysis on those. All right. So here is our quote board. This is where we like to start our review or the update with on a daily session or on a daily basis. So crude oil, 415,000 contract, and we are down 2.33% from the previous day close. Your previous day close was up here at the 53.98, and our last traded price, as you guys can see here, is 52.36. So we are down quite significantly from that previous day close. And we are also down from the open. As you guys can see, open was right up here, right around the 53.89. That's what I've got as the open. My quote board showing me 54, which is fine. It is what it is. But what it's essentially showing you is that we are below the previous day close and we are below the open for the pit session. So that is quite a bearish tone on that market on crude oil. Ooh, one thing I forgot to do is to look at what crude oil numbers were. My apologies, guys. Let me get back to that because that's a big one. That's one of the reasons why crude is where it is at this part of the session. So let me just jump back onto that, give you guys what the numbers actually came out as before we continue on here. That's why it's not in my notes. Vicky is not here. Give me 1 second, guys. Let me pull this sucker back up. One second, guys. Let me just jump on George's computer. I don't have the squawk running from my side just to get you guys the numbers here. These numbers are important, so I wanna get you guys those numbers before we do anything going further. Can you down on this thing to 10:30? I just want to get the EIA report on the screen. Appreciate your patience, guys. Where is the 10:30? All right, there it is. All right, guys, so crude oil, the report came in. We were expecting a draw of 1 million barrels for crude. We were expecting, what is that, zero? we're expecting 0 million expected for gasoline, and we were expecting a draw of 2 million for distillates. Crude number came in at a build of 3.1 million versus +1 expected, so that is a bearish number. Gasoline came in a bit of a draw, minus zero point 0.2 million versus 0 million expected, so a bit of a draw on that one. That's a bit more bullish. And distillates came in pretty much as expected, minus 2.4 million versus minus 2, which is, I guess, slightly bullish. So gasoline and distillate numbers came in slight bulls. Crude number came in at a bear. And typically, when you get a miss, a big miss, or a big beat on all three of those numbers, is when you get that kind of movement. But this week's report, even though only gasoline, or rather crude, was the only one that came in at a big build, or yeah, a big build, the market still dropped. So that's good to see. Last week's EIA report was a bit of a dud, to be quite honest. Not very much movement on the back of that one, but today's one was awesome, and really proud of the team today. I'll get to show you guys our numbers for October, and we are starting off on a streak, which is awesome. We're going to look to continue this puppy into the end of October. Volatility starting to kick back in. This is what we've honestly been waiting for. These first 2 days of October is the regular, I guess I want to call this a regular season volatility. Summer season starting to close out here, and we're getting regular volume and volatility coming back in. And this is where the money is really made, guys. And you'll see that when the market moves like this, our team kills it because we've been in a bit of a tougher session this September. Yes, there was movement, but it was very slow, very choppy, very grind-like movement. And now we're starting to get directional movements, and this is when our team honestly kills it. So really, really happy with the team. As far as the SPOOs are concerned here, guys, you guys are seeing volume starting to kick back to regular 1.18 million contracts on this part of the session at 12:11. So we're finally getting back to volume levels that we tend to see after the summer volatility kicks off, and this is an optimistic sign. As long as we can continue with around a million to 1.5 million contracts around this part of the session, we're likely going to get some good volatility and some good volume coming into these markets, giving us more directional moves and less of that slow, choppy grind kind of price action. All right, so daily change percentage, we are also down 1.79%. Our open was 42 quarter. We are down 29.42 quarter. We are at the 28.85 halves at the moment. Our previous day close was all the way up at 29.42 halves. All right, guys. So 42 halves. Our U.S. session open was at the 22 quarters, and we are currently sitting, like I said, at the 28.84 3/4. Man, I'm just looking at that short. I had a short in the 88 3/4 or so. I'm not sure if I got taken out on the full profit or not, but she's starting to move, which is cool. All right, so that's what I'm seeing. Both of these markets are bearish on today's session. You guys will see we are below the US session opens and we are below the previous day close, which gives us bearish indicators. So now that you guys know that, volume on crude oil, could be better. 500,000 contracts, usually what we tend to see. However, we're still getting some good volume. So both of these markets at this part of the session, good volume, pretty good volume. And we are getting some directional moves, which is what we like to see. Taking a look at the pivots, the pivots, if you will, you've got crude coming into S2 at this moment. S2 is at the 52.06s. We just clapped below the S1, nice straight flush down on that last 11 a.m. candle. All right, guys, so this is a 1 hour bar chart. And so if I zoom out a little bit, you guys will see, and we've been calling this since that gap last or 2 weeks ago with that 10% gap. We filled that gap now, and we're continuing lower. And this guy's kind of kept us on the right side. We've been saying we are making lower lows, lower highs, and that's kind of been the trend. We just broke to a fresh new low at S2. If you take a look at what tends to happen every time we break a fresh low is we get a rotation. Same thing happened here, broke to fresh low, got a rotation. We broke to a fresh low. You guys should know what we're looking for next, a rotation. Where does that rotation take us? Well, S1 is your first best bet. I'm kind of lining this up with that previous day low. Previous day low was around the 55.03s or so. Sorry, not 55, 5303s, and your S1 comes in at the 5285. So that's not the best level, but basically, excuse me, looking at that support level, that should act as resistance as we come back, and that kind of confluences with the S1 should be a pretty good resistance right there. If not, we might press a little bit higher up to these 53.85s back into that pivot. Ultimately, though, we're looking for that trend to remain with the lower highs, lower lows. On the next rotation up, your current lower high is right around, let's call that 54.10s or so. All right, so as long as it stays below that previous lower high on this rotation, could look to sell it back, hit it back over the head for a continuation lower. At this point, let's jump onto the 10-tick chart here. What you guys will see is we kind of came down into this level, held some rotations, broke to lows right here. We did see some buying coming in with some increased volume as we rotated up. So this was a clear resistance zone. All right, we've come down and we started selling off here. So now the real question becomes, there's likely some buy demand in this level. Do we come in here, make a lower or higher low, and do we press up above that? If yes, then the microstructure is going to shift back to the bull side, and from there you might get a bit of a rotation up into that pit view app, maybe into this previous day low or so, back at which point I would start looking for the sell back to the downside. All right, so that's kind of what I'm watching here. Your next two options on this market are either we get a higher low here, we break above this short-term structure, curl back, hold, and make a press higher, at which point I'd be looking to sell here. Not really looking to take part of this counter trend fade. All right, so safer bet is just to wait for either this to happen, wait for it to come up in here, and then sell that puppy back down. Or your second option is wait for a nice clean breakdown of that level, let it get into these 51.90s, 52s or so. I'm seeing some bids down there, and then try to catch a rotation back up for sellers to come in, defend that, and for a press lower. All right, so those are the two next best trades on this market. And on, oh man, S&P is dumping. That's okay. We do this for you guys. So here's S&P. Let's get on the pivot chart. All right, this thing's just dumping nicely. And, you know, we were saying this yesterday as well. And for the last 2 weeks, we've kind of been saying, you know, on that 1 hour time frame, we have been making lower lows and lower highs. And same thing happens, you know, we break to fresh lows, we get a nice rotation up. This time we broke to fresh lows. That rotation was not as aggressive, right? The bear, or rather the buyers, barely had anything in them to get it back up. We just saw the sellers kind of consolidate below pivot and just dump this thing back below S2. So selling is quite aggressive on today's part of the session. And we did break below S2 here. Right, nice clean break. This one single 1 hour candle took out S1 and S2. Was it a single hour candle? It was not a single hour candle. I'm just kidding. So there was the last 2 hours here, you guys can see broke below S1, held S2, then we just broke below S2 and closed back below it. We are pressing down lower now, but this has been quite an extended move. As we approach S3, we're starting to get into overbought or oversold market conditions. So if we do get into those 2860s, I could see a potential fade. But at this point, downside is the right side. And like I said, again, break to fresh lows, you often get a little bit of a rotation to test that previous support as resistance for a continuation lower. Your 2900s were a big level, right? 2900s a big level of support. We've broken that. I could see us trying to rotate back up into it. Your US session view app sitting right around there, and you've also got some previous structure highs as well sitting right around that level, vis-a-vis there. All right, so what I'm seeing is, yeah, we did break to a fresh low, but if we kind of consolidate this low and, you know, tap the 2880s and pull up, that might get us a fade back up into these 2900s, at which point you could look to sell this thing back down. I think as we're getting towards these lows, and the more that we break those lows and just marginal breaks and then recover quickly, break it again, recover quickly, break it again, recover quickly, and then we start to hold support, make that press up for the highs, and then that's kind of going to get us back into value. So again, not really looking to buy it. However, that might be what's coming soon. You don't really want to be buying a falling knife. However, if you're getting geared up and you're looking for a fade, you should be looking at where that might end for a potential jump back onto the short side. All right, so just because you're looking to qualify a fade setup doesn't necessarily mean you have to trade it. If you're able to qualify a fade to the upside, that should simply show you the pullback to your level of value is starting to come, and you should be getting ready for that. All right, so that's what we got on both of these markets. It's a couple more people. Chris, what's going on? Chris and Joseph, good to see you guys in here. And that's basically it for the analysis part of the update. You guys can go ahead and input any requests you might have for one or two tickers before we sign off. So what I'll do now is I'll pull up our TradePro Performance Index, and then I'll take any requests you guys have, and we will go from there. All right, so here is a TradePro Performance Index. We did not change this, but now we're changing it. Bam. All right, so this is what the performance index looks like here. Before I mess things up, we'll just leave it like that. So what the results look like for yesterday, we had a pretty good result, live positive 80%. It's been a while since we hit 80%. And today, the team just smashed it out of the park. 86% finished live positive, 71, almost 72% of the team was up, almost 16 was flat, and just under 15% were down, giving us a great start to October. 83%. This is the strongest start we've had to a month since we started recording these results, and quite optimistic on this, and we're looking to continue this trend into the end of October. So 83%, man, these trade pros are just smashing it out of here. And if you look at September, if you guys didn't catch that last one, just get rid of these demo results here. 67% was the average, right? I don't think there was a single day that we hit 80%. No, we came close, but never hit it. And like I said, October is starting off very strong, and we're going to look to continue that trend as this month progresses. All right, so that's what we got on that front. We've got our gold bug here, Roni. So we got gold, and I think natural gas was the other one. So what I will do is, let me just pull up my TradingView charts, and we'll go ahead and get started. Where did that little thing go? To answer some questions in here, Craig, is this a start of recession, market correction, or buying opportunities? Craig, I think this could be, I don't want to go on air and say that this is it, but it's starting to look like it. The numbers are starting to show the story here with all these, revisions lower with the ADP non-farm change. What else did we have? We had that big ISM manufacturing miss yesterday, huge miss since, largest one since 2009. So the numbers are looking pretty dire. And like we always say, markets don't crash from lows, markets crash from highs. And is it really any surprise that we are kind of selling off from where we are? Because if you look at where we are in the overall, trend of things, we pretty much retested those highs, and that's when the bad news start to come into the market. So I don't want to say this is a full recession, but it's starting to look like it. And here, let me minimize this sucker and get you off and get you off, and we are up. All right. So let me clean this guy up because I haven't done much on this recently. Let me just get rid of all these drawing tools. and start this thing from clean. All right, so if I'm just going to highlight a couple of key levels, you had your previous highs. Surprise, surprise. You've got this little low right here. You guys will see this was a pretty key level right around these 2800s. All right, so if I just come in here, flop a little line down. All right, that's pretty much the range that we're within right now. All right, so that's the, whoops, that's the buy side there, and then the sell side's kind of sitting right up here. All right, so let me change the color on this sucker to red. All right, so that's kind of what I'm seeing at this point in time, and it's really no surprise that bad news is starting to come out as we are approaching highs. We've approached highs, a lot of rotations, and now we're starting to sell off, and you can see volume starting to pick up a little bit on these last two down days. Are we completely out of the woods? Not quite yet, but you know what? I might actually put this thing a little bit lower here, just because that looks like a nice, there we go. That's a nice little range. All right, so if we come down to, these 2750s or so, yeah, that's going to be quite a big drop. But if you look at it overall, we'll still be 2019 lows were down at these 2450s. So even if we get back into these 2750s or so, it's going to look like a big ugly head and shoulders. But that being said, that will still be a correction. If we get under these 2750s, then you might start seeing some carnage as we might try to retest those 2350s and then back below that. As it stands, this is just a pullback. We've seen this thing pull back, hold here, pulled back, hold here. This pullback didn't quite get as deep, but it took us back to previous highs. So, we are still in the context of a bull trend. We are just releasing some of the late liquidity that got long up there. And 2800 is kind of the next level, with 2750 being another key one on this boost. So whether we're in a set recession or not, at this point in time, it's starting to look like we are getting some sell side pressure come out. But like I said, I can't really say that we are in one until we really get back under those 2750s and make a press towards these 2350s. All right, so that's what I've got on gold. Um, All right, yeah. So Craig, wouldn't really be looking to buy anything until we got into 2750s. This will support, like I said, it's worth a try if we get down here because the trend is bullish still. But if we do get a big breakdown below that level, we'll likely be in a little bit of trouble. One of the key things, longer term investors tend to look for is that 200-day moving average. You tend to see that stuff on Bloomberg, on your, your Fin Media. So if I make this guy a little bit fatter and thicker. There we go. All right, fatter and thicker. Where are we at right now? We are literally approaching the 200-day moving average. All right, so this is definitely a level where we can get a bounce from 28.75s. You can see in the past this level's held quite well. And generally what you're doing is if it breaks below the 200-day moving average on the daily chart, easy step to do is come out to the weekly chart, see where that weekly's at. All right. And that's your secondary downside target. So your weekly's at 2550. You guys can see last time this thing dumped down into that level, 2019, is basically a V bottom that took us to fresh highs. And so now on the weekly basis, we are quite far away. We've separated quite far away from that 200-week moving average. So on the daily chart, if we do get back below this 200-day moving average, right? Your next target is around these 2550s where the weekly 200 weekly moving average is at. All right, so if we crack that, we can probably get a move back down in there. That's where we should hold. If we get back below the 200 weekly moving average, then we're starting to get into some trouble. All right, and the reason why we say that is if you take a look back, when was the last time we actually cracked below that? It's been a while. Look at that. 2008 was the last time we cracked below the weekly 200 moving average. All right, so last time that happened was 2008. Might be the same kind of scenario if we do get back down there. Until that happens, bull side is in control. Um, Awesome. I'm happy to hear that, Joseph. Yeah, Roni, we're gonna get to gold in just a second. We're gonna get to gold in just a second. So that's what the S&P 500 looks like. Let's take a look at gold. Get rid of some of these things. All right, so here's gold, and this was a chart that I drew with you guys 2, 3 weeks back. Just get rid of that 200 MA. All right, so this is the chart that I drew with you guys a couple weeks back, and I don't know. I'm still on the opinion, on the side of the opinion that still a little bit too much buying going on up here. Granted, if the SPOOs continue to dump, you might get that press up higher. But as it stands, we did have, like I said, we did have that aggressive move up. Um, this is a historic move from these lows below, what was it, 1400s or so. Yeah, 1360s or so. Once we broke out, that was a big clean breakout. A lot of money got long in there. And this to me still feels like a consolidation. Not really interested in buying this thing down here. Like I said 2, 3 weeks ago, nothing's really changed. Not a fan of buying it here. I'd prefer to see it get down into these 1440s, 1400s before I look to get this thing back long. Sure, if it rips here, I might miss out on that, but I'm not really focused. Once you guys start doing this long enough, you stop focusing on the money that you could potentially make and you start focusing on the risk. Because when you focus on risk, that way you're putting yourself in a position to get in at the best value. If you're just starstruck by the potential, if I get in at 1500 and bam, it goes up to 1600, I can quit my job, retire, and go sit on a beach. You know, that's not the way to look at it. This thing is a marathon, and you got to focus on your risk first, and your profits are a result of managing risk. So to me, right now, there's still too many longs up here. I want to see a deeper pullback. Like look at where we came from. All right, look at where we came from, all the way from these 1175s back in September 2018, and this was an aggressive move. All right, this was an aggressive move, and so for such an aggressive move, for us to be done a pullback just like that, I still think it's too early. I think we're going to get back to these 1525s. If we get back up into this level and we fade off of that again, perfect. That's going to come right into my zone where I'll be looking to get long. If not, if we just crack right above that resistance, right above that previous resistance, that's fine. I'll just be looking for the pullback, find some support, and then we'll continue to play it higher. Right? There's no reason to chase this thing. You've already missed more opportunities than you're ever going to catch in your trading career. So just that one point in itself should give you some measure of patience. All right, so that's what I've got on gold for you gold bugs. And let's see if I've got a natural gas. Natty gas. Yeah. So natty gas was an interesting one. Nice big rejection off of this one level that I had drawn in here. Let me just get rid of this sucker. All right, and dang, this thing has just sold off. So from a daily perspective, let's just clean some of this stuff up here. Let's get rid of some of these tools. So we'll get rid of that, and that was this level right here. So that's gonna be my supply level. And then man level that basically caused this whole thing was right down in here. All right, so that is the larger term trend on natty gas. And we can see it did pop up into previous highs, like I just mentioned. It did pop up, and we did find selling, selling supply, selling pressure coming in right around those highs, and we've sold off quite aggressively here. I don't know why my volume's so, there we go. Volume's picking up here, and you guys are seeing, clear control from the sellers here. Yeah, we came up into that level, got some pretty good volume, but that volume was likely selling because you can see there was no bullish follow through. In fact, the first down candle we had higher than above higher than average selling, and then since then selling's really taken control. So if I drop down onto say 4-hour chart here, it's, it's kind of a leisurely drop, if you will. One of just looking at Victorio because that's his favorite saying, but a bit of a leisurely drop coming down, and so as it tends to drift kind of sideways like this is looking more and more likely for a bit of a pop. Release some of the buy stops of the sellers that have been dropping into here, and maybe close up this little vacuum. So for this market, I kind of like that level. All right, so maybe another rotation up into, now the fact that we've gone down so aggressively, if we come up in here, kind of fill that thin spot into that zone, then you can look to hit it over the head. That's what I'd be looking for. But again, I don't really trade this market as actively. Maybe once in a while, I'll take a look at it. But that's what I'm seeing. Sellers are in control. However, on the intraday time frame, let's see what the 1 hour is looking like. On the intraday time frame, we're starting to kind of slow down. You guys are seeing, these candles here were showing aggressive selling relative to the buying that was happening, aggressive selling, and that's kind of fading off here. You guys are seeing, yeah, they're still selling, but selling's not as aggressive as it was here, as it was here, as it was here, or as it was here. So selling momentum is dying down, and typically when that happens, you likely get a buy stop release from previous swing highs on the way down. And the last bit of aggressive selling I saw was here. So if I had to refine this level down, I would basically make it something like that. All right, so we had a little bit of a rally, base, drop, and so rotations back up into here. I'd be looking to sell that puppy back down. All right, that's what I got for you guys. Would you create option positions to offset downward movement in prices like gold and the S&P 500? Craig, it's probably a better question for Victorio. He's our options guy in here. But I wouldn't see any reason to open up options trade unless you're actually in positions. So if you've got a long portfolio for SPOOs, or not SPOOs, but if you've got a long portfolio that's net long equities, or net long, say spiders or something like that, and you want a little bit of downside protection, yeah, you can use options to kind of hedge yourself, hedge your upside by opening up those options positions to limit the downside. That way, as if the market does drop and you're net long, yeah, you're going to lose some value on that long position. However, because you have the downside protections, those are going to what's it called? Those are going to find value. They're going to increase in value. So you're going to be offsetting the drop in your long portfolio by the gains made on the short side. So that's what you would use those options for. Like I said, if you have an existing position, if you don't have any existing positions and you're flat, I wouldn't be using options. I'd probably be just using futures to capture that position. So I myself don't really trade options as much anymore. I started in options, got a little bit destroyed, moved over to Forex, and now we're ripping futures here full time. So that was my journey. But yeah, like I said, options would make sense if you are using, or if you've got already positions net long. Alan, how can I understand the inventories for natural gas? Um, Alan, a good book I'd recommend reading if you're looking to get more into the fundamental analysis of these kinds of things is Global Macro Trading. I don't remember who the global macro trading. Let's see who the author was. I don't remember the author. This book. Greg Gilner. This is the gentleman. So this is this book right here. If you're looking to learn more about, the fundamental analysis, how to read all those kinds of reports, that's a good resource. Where did my YouTube go? Here it is. That's a great resource to use, Global Macro Trading. All right. Other than that, maybe we will, maybe that's a cause for a YouTube video for us that we can take a look at. All right. So that's what we've got on that front. No. All right, so Craig, everybody looks like you've had your questions answered here. So that is perfect. No, it's a bit of a vague question. Makes sense. Cool, cool. All right, cool, guys. So it looks like a majority of you, I've answered all of your questions. Joseph, I see John Neto. I'm not too sure what that means, but that is okay. So that's going to be a wrap for this one, guys. A little bit longer, but I thought I'd go ahead and cover some of your questions, cover some of the markets that you guys want me to take a look at, and we went ahead and did that. So I'm going to be signing off here. Again, our team absolutely killed these markets this morning, and I'm just looking at our main screen here. It looks like SPOOs continue to drop, and not really surprised. That's kind of the way it's been going on today's session. So if you guys enjoyed this one, if you guys enjoying what we're doing here on a daily basis, please do subscribe to the channel. Please do, ring that notification bell so that you do get updated anytime that we go live or anytime we drop any new videos. I say this, almost on a daily basis. We're on here twice a day, before the market open at 9 a.m. and after the market open, 12 p.m. Eastern, usually 12 p.m. unless there's technical difficulties or anything like that, like we had yesterday. And we also drop 2 videos a week on the weekend, Saturday and Sunday, where we try to give you guys great content. We try to give you guys, content that's more valuable than what our competitors are charging you, for that kind of content for free. So like I said, if you guys do appreciate that stuff, please make sure to at least like the page. That really helps us out, puts us in front of other people like yourselves, and helps the channel grow. So like I said, if you guys are enjoying what we're doing, please do show your support vis-a-vis a like, vis-a-vis a comment, and vis-a-vis a subscription. All right, so that's going to be me for today. Hope you guys enjoyed this one. Until tomorrow, you guys know the 3 rules: patience, diligence, and discipline. There's already been a couple good moves. I do anticipate a couple more moves coming in, but like I said, it's very easy to get overexcited and just try to jump in the market because it's moving, and that's where those 3 rules come into play: patience, diligence, and discipline. That's going to be my sign off for today. Until tomorrow, guys, good luck and good trading. Take great care. And stop stream.